Just as of today, I added a brand new income generating ETF, which has the potential to pay massive dividends on a monthly basis, along with exposure to capital appreciation. If you want to learn more about this ETF, make sure to stay tuned because you are not going to want to miss this. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the ETF that I just added to my portfolio today, just a very small position just to feel it out, is FEPI or FEPI, the Rex Fang Innovation Equity Premium Income ETF. Now right here on the Rex Shares website, it says FEPI's objective is to own big tech, which I like because these names are higher beta, which means there's more potential for upside. But along with that, these names offer bigger premiums, which is perfect because FEPI's other objective is to write cover calls, which makes enhanced income potential. It says Rex Fang Innovation Equity Premium Income ETF. The fund investment objectives are capital appreciation and current income. Now digging a little bit deeper into this income ETF, here's the fact sheet. It says the objective, like we said, is to combine big tech stock exposure and a potential for steady income in a covered call ETF. Now, some crazy stats about FEPI so far: distribution rate 25.20%. Now, the reason this distribution rate is likely this high is again because big tech offers juicy premiums, which means there's the potential to earn a ton of income if the market trades within your favor. It next says the approach is to own big tech. FEPI owns the 15 stocks from the sole active Fang Innovation Index. Plus, along with this, FEPI sells call options on these big tech stocks, seeking to harness their volatility. And because these names are so volatile, because they move so much consistently, whether up or down, they're going to offer juicy premiums. Now, because of this, FEPI seeks to provide monthly distributions to investors with no K1, which is awesome. K1s are kind of annoying when it comes to tax time. And trust me, I own enterprise products, which does in fact make you file a K1. Now, benefits as big tech exposure: FEPI provides exposure to leading tech firms within the Fang Innovation Index, equally weighted, providing a strategic approach. Now, potential income generation: FEPI aims to steady enhance income by selling out of the money call options, harnessing big tech's volatility while capping some of the potential stock gains. Now, also with this potential downside buffer, which is one of the main reasons on why I am such a big fan of covered calls, I don't mind limiting my upside if it means that I'm protected when the market turns sour. FEPI uses the covered call approach to counterbalance potential market declines, seeking to offer mitigation from price declines of these big tech stocks. Now, although this fund has been around since last year, and I definitely have heard about it, it really has taken me until today, honestly, to dig a little bit deeper into it, and I'm liking what I'm seeing so far. Now, the fund's inception date is as of October 11th last year. The primary exchange is NASDAQ. The gross expense ratio is 0.65%, so you are going to be paying a little bit to get exposure to this ETF, but because of the management, it makes sense. Net assets as of right now are 161 million, so relatively small compared to some of the other covered call funds like JEPQ, JEPI, or even SPYI. Now, like we said, distribution rate, which of course can change in the future, but as of right now, 25.2%, which is very impressive. Monthly distribution, which I love. And the top fund holdings, these are all names for the most part that I don't mind having exposure to. And I will also mention that some of these names specifically, I don't really have that much exposure to. So that's also one of the reasons I wanted to buy. I wanted to start buying some shares of FEPI just to get some more exposure to some of these names. Now, the top names are Micron Technologies, which we're all familiar with. We have AMD, we have Alphabet, Tesla, Intel, we have Amazon, Nvidia. Then there's Adobe, Salesforce, Microsoft, Palo Alto Networks. We got Netflix, Apple, and AMD. Now, before we look into FEPI's price performance, the dividends that were paid so far, and dig a little bit deeper into this ETF, I also clicked on the 19A/1 notice on the Rex Fang website. And this is also a very important aspect of this ETF, especially for those investors out there that are a little bit more conscious on how they're getting taxed on their holdings, how they're getting taxed on their dividends, distributions, etc. This notice provides shareholders an innovation equity premium income ETF with information regarding the portion of distribution paid on March 28th that is estimated to be made from net investment income, net realized capital gains, and return of capital. So this gives you a little bit of an idea on how things at least should be taxed when it comes to tax time. Now, this is just as of March, keep in mind, but net investment income, it looks like 0%. Net realized capital gains, 0%. It looks like return of capital is $1.19 or 100% or $5.91, and that's 100% total cumulative distributions year to date. Now in this video specifically, I'm not going to go through exactly how all these are going to be taxed and different tax strategies, because that's for one a very individual thing that you need to figure out. But let's just say return of capital is very favorable for some investors looking to kick the can down the road. So we looked into how FEPI works, the top holdings, and even the fact that it might be tax efficient. Now to look at this ETF's performance on the max time frame. Remember, this ETF has not been around all that long, so take everything with a grain of salt. Things can of course change significantly from here, but as of October of last year, this ETF is up 6.21%, which is not horrible considering the dividend is so massive. And on top of that, we're not seeing any massive decay, which is a big no-no when it comes to covered call funds. Now, I said the dividends were massive when it comes to FEPI, and they definitely are. $1.19 on a monthly basis, basically every single month, more or less, with the caveat that the first dividend paid out last November was a little bit smaller. But it looks like for the most part, this fund is doing what a lot of other covered call income style funds are doing, and they're using their net assets to sort of pay a consistent dividend monthly for investors if they, of course, can. Now, for an ETF that costs just over $50 per share, if you're going to earn around $1.19 on a monthly basis in dividends and have the ETF price remain at least stable or maybe even move a little bit up and to the right, I think that's a major win for investors, especially investors like myself that are seeking not only some appreciation long term, but want income generation today. But the real test is to see if or if not FEPI has given a total or a negative total return if an investor were to have invested just $10,000 into FEPI and reinvested the dividends along the way. That investor would have bought FEPI back in the day at $51.69 per share. Now FEPI's $53.90 per share, more or less, as I film this video. Now the dividends along the way were around $4.72, and with this investment, an investor would have had a total return of around 13.45% or an annualized gain of around 24.25%. Or of course, turn that $10,000 investment into $11,345, and this is just in 0.51 years. So I get it, we don't have all that much time to go off of, we don't have all that much historical data to go off of, but at least so far, FEPI has returned well over 10% total return, and this is of course with dividends reinvested. Now, are there some ETFs out there that have done better during the same time frame? I'm sure there is, but there's also a lot of covered call income style ETFs that have done a lot worse in this time frame. And overall, my plan with this ETF is to buy a few shares here and there, especially if it starts to dip in price, load up on some shares, try to dollar cost average my way down a little bit, and hopefully if history were to repeat itself, lock in a $1.19 dividend every single month and sail off into the wind. Now, I actually had a recent conversation about investing in some of these higher yielding income generating ETFs like FEPI, like JEPI, like JEPQ, QYLD, etc. And I want to make it very clear that even though I am a younger investor at 31 years old, that is very interested in building out a long-term portfolio that generates a substantial amount of income every single month, etc. I still think it's very important to have a ton of positions within the portfolio that are your foundation. I'm talking names like Apple, things like SEHD, etc., etc. But if you're an investor that also wants to build a portion of your portfolio that offers some significant income to use for bills, or to do what I'm doing currently to reinvest into more different dividend paying stocks and ETFs, I don't personally see anything wrong with that. But when it comes to FEPI, ticker symbol FEPI, I want to hear from you guys down below. Are you guys a fan of this ETF for income generation? Or is there a better dividend income focused ETF that you want to see me go through next? If you enjoyed this video and you want to see more videos like this in the future, make sure to drop a like down below, subscribe, and make sure to grab your very own dividend tracker. It's the first link down below in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.